Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Somit Sarkar, and for now the market is looking quite okay. In fact, from the low point of the trading session, we have seen a meaningful recovery, almost 80 to 100 points higher from the bottom of the day, but since the 21,000 mark, that continues to remain elusive for the market, so not in a hurry to go to that mark. India VIX is also sitting at 8-month high level, almost very close to that 14 mark ahead of the Monetary Policy Committee meeting, something which is pretty much expected. Nifty Bank has taken a pause today. Over the last 5 to 6 trading session, we have seen a massive gain of 3,000 points and that index. So bit of consolidation is par for the course, but it's power sector which is seeing quite a bit of buying action. To add to that, metals, chemicals, fertilizers, these are the buzzing sectors in the trading session. And even if you look at the frontline index, Somit, it's Reliance Industries which is higher, ITC, L&T, and these are the heavyweights which are adding almost 70 points on the upside on Nifty.
Yes, apart from that, stock-specific Angel One came out with its November update. Strong growth that we have seen. On the back of that, the stock is buzzing. Oil marketing companies is one counter which has been buzzing in trade for quite a few days. Today, Citi came out with a report where they have hiked the target price for all the three oil marketing companies, that is HPCL, BPCL and Indian Oil Corporation. For BPCL, they have hiked the target price to 560 from 450. For HPCL, they have increased the target price to 450. And for Indian Oil Corporation, they have upgraded their rating to neutral from a sell and have also hiked the target price to 125 from 85. And fertilizer stocks, as you were mentioning, Anisha, are buzzing on the back of the source-based story that we have, that government is seeking additional allocation for subsidy of around 13,351 crore rupees. And Sharad will be joining us to give us more details on the same.
The fertilizer stocks have been buzzing in trade today. An important news flow coming in is that the government is seeking additional allocation of the fertilizer subsidy of northwards of more than 13,500 crore rupees. Now already for the Rabi season, government has allocated 22,000 crore in terms of subsidies, but to counter the increase in the global prices of the fertilizers, this move might be taken. Also importantly, a global news flow coming in is from China that they're considering a quota system when it comes to urea exports in 2024. Because of this, there's chances that the global prices of the fertilizers may go up more higher, and to counterattack this, India would be going after subsidies for the fertilizer companies. Looking at the global prices from June lows itself, DAP fertilizer is up more than 34%, and if you look at the ammonia-based fertilizer, their pricing has gone up by more than 120%. Even the widely tracked Bloomberg Fertilizers Index is up 6% from its recent lows. Now looking at the subsidy history of India, the bulk of subsidy was coming in FY23, but it's expected that the subsidy for FY24 might shoot even 1.7 lakh crore mark. Now for the investors itself, the returns are coming, especially in the government-related fertilizer stocks. It's the same returns what we saw in 2022 in the rally, and in this run-up also from 2023 lows, stocks such as FACT, RCF, Madras Fertilizers have given investors more than 80% returns.
Okay, Shara, thanks so much for putting that into perspective. But let's get a technical check on these stocks as well as markets. And even Nitin Raheja is joining us from Julius Baer to talk to us about the fundamentals of the market. But since we're on the discussion of chemical and fertilizer sector, Kunal, let me first get a sense from you on the chart of a lot of these stocks, right from FACT to RCF to Balaji Mines, Tata Chemicals, GSFC. The list is really long. Anything that is catching your attention?
Yeah, I think many of the fertilizer stocks, RCF for example, has managed to come back towards a breakout of the previous high. I think it's a 52-week as well as a multi-year high for RCF. Looks very attractive at current levels of 150. GNFC also is another stock from a similar space which has been doing pretty well. GSFC, I think yesterday or day before, the stock had already broken past about the 215 to 20 mark, and today the stock has managed to build up higher from those levels. So that's an attractive space. From the chemical basket, I think the likes of SRF as well as Navin Fluorines are the ones which have been looking attractive. Many of the other stocks are trying to play a catch up for themselves, but I think the charts for SRF has been a bit more stronger as well as a leading one as compared to the other peers.
Okay, Nitin, the mine space, be it Alkyl Amines or Balaji Amines, both are up in trade. Now what we understand from a chemical check is that methanol prices have come down by around 9% and they're one of the major consumers for the same. Hence, obviously, their raw material costs will come down. But how do you see this chemical space, the entire chemical basket? Because we are also hearing that soda ash prices are moving up, inventory issues are coming down. So what is your view when it comes to the chemical space currently?
Look, I think chemicals as a story is something that needs to be played more from a long-term perspective. rather than looking at it in a short term. Clearly, all the issues plaguing the chemical companies with respect to stocking up and so on and so forth are going to play themselves out over the next couple of quarters. Right? When our interaction, just as you sort of talked about, also gives us the impression that I think chemical companies will start seeing better days as we go 2 quarters down the road. Now, within those, I think it's very important to see that the other sort of headwind that we are also seeing currently in chemicals is that there is a slowdown in Europe. A lot of clients in Europe are holding back orders. So I think there is a short-term challenge that the space is seeing. But I think if you take a little longer-term view of at least the next 1.5, 2 years, clearly I think there are very interesting plays that reside in the sector. There is a stickiness to the business. Clients don't really change their suppliers very often. There is a whole process in terms of getting empaneled with these business clients. And so I think some of the existing companies have actually seen a reality check in terms of valuations. In fact, in the last 2 years, if you see, chemicals have done virtually nothing. The high lofted multiples have progressively come down. And now I think some of them are trading at valuations which could be great contrarian plays to look at.
Contrarian plays and all of those factors that you pointed out, European slowdown and the pricing and all of that is something that we discussed with the management of Anupam Rasayan as well earlier in the day. In fact, listen into what they told us.
Destocking is an issue. Yes, the channels have had a little bit of more inventory than what the market was comfortable with, and the industry is unwinding that. That is pushing the demand for the backstream guys a little further to by a few quarters. Yes, China is coming in, and that also is reducing the kind of market supply, increasing market supply and reducing the demand further for the industry. If you look at in total, I would say that probably by that large part of the whole pain has been through, and I guess in next quarter or two you should be able to see something moving back to a more normal growth that we have been seeing in the past as well. If we see, the manufacturing in Europe has been a bit of a challenge. That's true, but see, at the end of the day, there is large capacities, especially for the formulators and for the brand owners and the market, and that we don't see that is going to go off significantly over the near term period. Probably there will be a lot more of offshoring happening, and that's probably the opportunity for countries like India and China, which will really be taking the advantage of the offshoring that would happen from a branded guys to which they were typically doing it in Europe to, let's say, Celtigos and Lanxess and all, which will come to probably to companies like us and to our peers and the industry here.
Okay. Paytm is one stock that would remain in focus. The company has its conference call today with analysts, and now what we're understanding from ET Tech is that they have temporarily halted their postpaid operations as their NBFC partners are now a bit wary against, given the fact that RBI had raised the risk weightages by around 25% against unsecured lending. Naresh, on technical indicators, how is Paytm chart looking like? The stock is down currently 2% odd. Naresh?
Technically, Paytm has gone through a long enough consolidation of the last 1.5, 2 years, and then gave a breakout about that 750 mark. Now, 750 was the breakout in June. It went up towards that 950,000 mark a few times over the last few months, but 750 remains a base. So it's a contrarian buy on dips closer to 750 to 800 mark. So in this dip, it should be a buy with a medium-term outlook. A lot of these names in the new age tech have gone through enough consolidation and slowly and steadily should do well. So this dip is a good time to actually start accumulating.
Time to buy some of the stocks like Paytm as well. But Nitin, what's your view on the oil marketing companies? Somit was just highlighting the City note that we have got the price upgrades that we have, and despite that massive run-up that we have seen on the likes of HPCL, etc., they're still suggesting an upside of 30%. Would you buy to that argument that there is value on the table for these public sector entities in the oil and gas space?
Look, I think these companies were intrinsically trading at such cheap valuations, and with reason, right? Of course, the fact of the matter is that they are highly regulated entities. Although oil pricing was freed up, but we've seen indirect intervention take place from time to time, especially during the elections and so on and so forth. So you need to play them more as short-term tactical plays as such. And clearly, the valuations are yet not really dear. So I think there is some upside that clearly resides out there. However, it all needs to be seen because we're getting into elections in the next 6 months' time, and sometime in March the election code would come into play. Post which, I don't think the government can do a lot. But in that intervening phase, if so tomorrow if oil prices were to run up and the government wants to check inflation, you could once again have a soft intervention where not allowing them enough leeway. So these companies to us are more short-term tactical plays, and given the cheap valuations, to answer you, yes, possibly in the current scenario there is some upside there.
Some upside left. That's the net view coming in on the oil and energy space. But hold that thought, Nitin. It's time now to slip into a very short break. When we come back, we'll discuss a whole host of other stocks as well with a panel of experts. Don't go anywhere. Welcome back. Well, a lot of stocks buzzing around in the trading session. In fact, the market too is inching higher towards the highest point of the trading session. It's Sirma SGS, which is higher. You have Union Bank of India, which is doing quite well. Bank of India has seen solid demand. QIP, so that stock too is in focus, and a lot of PSU banking names actually doing okay. What's on the back foot is clearly sugar. Take a look at Balrampur Chini, that's down about 3%. Triveni Engineering is coming under pressure, and a lot of other names from that space are also down. But Nitin, the space I want to discuss with you is power as well. Today, of course, there was this fresh note that came in from Jefferies, but today if you look at stocks like Tata Power, even the other power stocks, they're all rising in the trading session. JSW Energy is up 5%. What's your view on power as a sector? Is it still a long-term bet, gains to be made over the next 12-24 months?
So, I think there's one round of re-rating that has happened in power. From as a sector perspective, it's a much more steady sector, right? You won't get outsized gains from it. The fact of the matter is that if you look at power, there has been huge underinvestment that happened over a decade. And now, as industrial growth has come back, we'll be focusing more on manufacturing as one of the areas of growth. Also, as more and more investment has gone into renewable, there is balancing power that is required from the traditional power sources. So clearly, you will see growth happening in all the power stocks in terms of investments coming back, whether in terms of efficiency, whether in terms of fresh investment. And more importantly, each of them will also have a value unlocking that will happen because they will all have a renewable energy play within them, within a subsidiary and so on and so forth, which could attract, PE investment or get separately listed. So I think if you take a longer term outlook to power, I think clearly there is a story that is there for the next couple of years.
Well, Kunal, Bajaj Finance, how are you looking at the Bajaj Finance chart? Because if you see in the last 1 month, it has not contributed much to the index's rally. It's down around 2% odd. How is Bajaj Finance looking right now?
I think it's looking exceptional on the charts. Sumit, I would probably believe that at 74.50 odd levels where it's trading right now, it could be a very good zone to try and buy the stock, expecting that the stock would get back into that line of outperformance. Now, there is one minor resistance for Bajaj Finance. I call it minor because even in the previous attempt, the stock took a pause for a couple of days before it managed to surpass the key moving average. I think that's closer to 74, 75 for the stock on the spot levels, which means another 40 points, 50 points from the current zone for Bajaj Finance. But I believe with the kind of volumes which you've seen in this leg of recovery, and especially at the bottom when the stock was almost at 7,000 mark, it's indicative that maybe the worst could be behind and the stock could probably get into a breakout. So we'll either wait out for a minor resistance breakout, which is 74, 75 odd mark for Bajaj Finance, and post that we could be looking at even an 8,000 plus kind of a target over the very short term.
Okay, point taken, but I also wanted to shift the focus and in fact discuss the NBFC space further. What's your view, Nitin, on this? Is it the time that those private banking names which were underperformers of this year will catch up and NBFCs, etc., will take the back seat in 2024?
So, there are two things that are going to happen. As the uncertainty around the election starts reducing, and we've already seen that in the last couple of days, FPIs which were selling into the Indian markets, and a large part of the selling was happening in the private banking space, which was an over-owned sector for them, will come down. And when private capital starts getting or FPI capital starts coming back to India, clearly the way the banking sector is positioned today, whether you look at growth, these are all 18-20% earnings growth compounders who are trading at 2 to anywhere between 2.5 times book. The largest private bank in the country is trading at a valuation I haven't seen in the last 25 years. So I think once you see FPI flows come back, you will see momentum come back into them. The domestic mutual funds who have actually been holding this and have sort of suffered an underperformance because this whole sector has really underperformed, will again start showing more interest and so on and so forth. So I think if you today, from a growth outlook, from a fundamental valuation outlook, if you look at it, I think that's one of the best places and most attractive places to be in.
Comes to the real estate space now, that is one sector that has been the top sectoral gainer on a year-to-date basis. It's up around 70-odd%. Do you see there's more value remaining on the table when it comes to the real estate sector?
If you look at traditional matrices, you will probably think that we're trading at top of cycle valuations. But what one needs to factor in is this, that the previous real estate cycle that we saw, the per capita GDP that where India traded at, vis-a-vis where we are trading today at, we are at $2,500 per capita, and it's expected to go to $4,800 over the next decade. You will probably see a lot more sustainability in this real estate rally. Having said that, it is very difficult to, for these companies to get exorbitant valuations for one simple fact that they're all driven by promoters. It's very difficult to look at off-balance sheet liabilities in these companies, and hence most of them would trade traditionally close to their NAVs. Now, if you look at where they trade, they're almost trading close to NAV. So I think the re-rating the sector is done. What you will see henceforth in the sector is the growth that will take place in terms of fresh projects and fresh sales and so on and so forth. So, and I think from that perspective, if you ask me, I think we yet have, quite a bit of legs in the rally that will take place and growth of the sector. I think it's been 3 years after a 10-year downturn that we have seen this upturn take place. I think I continue to believe that there is enough growth that will happen in real estate in the near future.
Can Fin Homes is the next stock that we should keep an eye out for, because on the speculation of an incidence of fraud, the stock was down in trade. The management actually came in and addressed to one of the broking firms, Elara Capital, saying that they have completely denied any of this incidents, but the stock continues to decline. Nuresh, how is the chart for Can Fin Homes looking like?
So the stock gave a breakout over the last few sessions. It was in a very tight range after that gap down. It made a range of 730 to roughly 790. So the breakout is done, and now structurally should first test that 900 mark, which is where it topped out in the near term. So an initial target price of 900, and if that crosses, we get into a new all-time high. So there could be further momentum. So trading stop loss now to be placed below, say, 790, 800 levels. So a buy at current levels as well as on dips.
Fair enough. So that's a take coming in on Can Fin Homes. But Nitin, what's your view on the entire auto sector? A bit of sector churn is what is quite visible. Those underperformers are seeing quite a bit of flow into them. So will autos be one of those candidates where people will book profits out of? Today, of course, CLSA had a downgrade coming in on two-wheelers.
It's what we saw in autos was led by a couple of phenomena, right? So the two-wheeler space was lagging, but premium two-wheelers were doing well, right? So you saw the TVSs of the world and the Aishas of the world perform better than say the Bajaj and Hero of the world. Now we've seen some sort of initial indication that there is a rural revival happening, and hence you've seen the other two stocks starting to catch up out there, considering their model base. In passenger vehicles, companies who had a model refresh actually landed up doing well, right? So anybody who was in the SUV game and had a head start there did well. Somebody who had in the EV game did well. So it was a game of model refreshes. I think we've gone through that cycle of model refreshes out in the PV segment. While Mahindra and Tata Motors have yet a waiting list, Maruti was a little late on the game, and so on and so forth. But what we are getting to understand now is that the pipeline inventory in the dealer channel is building up. In fact, the other day we were reading about the fact that the industry association has actually asked banks not to provide too much funding to dealers as they fear a build out of pipeline. So you could see post this festival season some element of slowdown in terms of PVs take place in the short term. But I think the model refresh and the long-term growth story continues. As far as CVs is concerned, it's seen a beautiful couple of years of cycle, and you've seen a re-rating take place. If you believe, but the capex program is going to see a short-term slowdown as we get into the election phase. So you see some amount of slowdown again take place. So if you ask me, autos are probably seen a short-term peak, but over a longer period of time, I think they will come back as economic growth continues.
Okay, so that's the take on the auto sector. And then on that note, we let you go. Appreciate you making time and speaking with us. But time now to take the closing trade ideas from our technical experts. Naresh, you go first.
So that would be a buy on LTI Mindtree. The stock has given a short-term breakout, and we are seeing good momentum across the IT space. So this could outperform in the near term.
LTI Mindtree was one of your picks from morning as well, and today as well you are suggesting that buying momentum should continue in LTI Mindtree. But Kunal, what about you?
Well, it's about TCS, again a large cap IT name which looks attractive. It's confirmed a very big breakout. It's almost like a 200 to 50 point breakout for TCS. So expecting the stock to do pretty well going forward.
Okay, TCS is interesting, Somit, because of course tomorrow is the day that the buyback is ending, but doesn't look it's going to be very lucrative for retail investors, right?
Well, if you see before the last day for record date was, the gains were around 22% and given the fact that the acceptance ratio is expected to be on the lower side, even if it's just say 20%, then the gains would be very much limited for any retail investor, given the fact that you have to wait for so many days. Getting a 5-6% gain won't make sense for any retail investor when the market is up around 7%.
And in fact, technically, Kunal is quite bullish about that stock. So I guess there are more gains to be made in the market rather than tendering in the buyback. So that seems to be the verdict for now. But time now to actually slip into a very short break, because as we're hitting that 3 p.m. mark, there's another uptrend in the market. We're just 40 points shy of that 21,000 mark. The big question is, will it happen today or not? We'll track that when we come back. Welcome back. It's good momentum that we're witnessing in the market, very close to that 21,000 mark, though it keeps eluding us. 60 points now. At one point of time, we're just 40 to 30 points away from that mark. From the heavyweights, it's ITC that deserves the mention. A good 2.5% move coming in. Reliance Industries is also participating. A 25-point push is coming in from that individual counter. And L&T too has seen a good run this week. In fact, for last 5 trading sessions, L&T has been up almost 10%. So good momentum across the board. It's ICICI Bank, which is again going to that 3-digit mark after hitting that 1,000 mark yesterday. So a bit of a volatility in some of these banking names. But volatility is also perhaps expected on account of that big event which is lined up for the Indian markets, and that is the Monetary Policy Committee meeting. It of course started today and the outcome will be there on Friday, 8th of December. Let's go across to my colleague Ankur to get an understanding as to what the street is expecting right now. Ankur, it's going to be a bit of a pause, but what about the other internals that market should watch out for?
Yes, all important MPC meeting has begun and all eyes will be there whether or not there is a revision on GDP target front, because the rate and stance is expected to remain the same. That is what is anticipated by many economists. But there is a scope of revision in GDP target because the numbers which came for Q2 were 7.2%. It is way above the overall target of Reserve Bank of India of 6.5%. So we need to wait and see whether or not there is a target revision time. And also on the inflation front, the numbers have come widely within the expected lines of Reserve Bank of India. So we need to wait and see whether or not there is a target revision for CPI as well, because October month numbers were 4.87%, which is very close to the target of 4% mandated for MPC. However, last time Reserve Bank of India governor has said that they will ensure that inflation aligns to the target until that time the war with inflation is not over. Apart from that, the Reserve Bank of India, although watches the domestic numbers only for deciding on the rates, but there will be eyes on US Fed as well, because last time, if you remember the commentary of US Federal Reserve, it was more on the lines that there is a less scope for reduction of rates. So it will be interesting to see that what stance our governor takes on those comments. And remember, there is a meeting which is scheduled next week of US Federal Reserve. So all these data points will be watched by Reserve Bank of India, and also there may be some announcements outside policy. Remember, last time Reserve Bank of India governor announced about unsecured lending risk part, and later on there were direction for lending institutions for increasing the risk weights.
Well, thank you, Ankur, for giving us those details. The street is expecting no change, and we also welcome Pashupati Advani on the show. And so, firstly, I would like to get your view on how do you see this MPC meet? Do you expect it to be a big event? What are your expectations from the MPC meet?
I think the world wants to keep rates where they are and start pulling them down. We don't have an indication of that yet, but I think that this MPC meet will just basically say nothing and just not really guidance, but we are followers. But I think that they're not really going to change rates this time. That's my humble assumption.
The consensus view as well, that there's not going to be a rate change this time. I think the bigger thing to watch out for is any change to the GDP estimates, and if at all the commentary becomes a bit more hawkish or dovish, is something to watch out for. But in terms of the market, what else is happening? Well, you have names like Adani Groups which are doing very well in the trading session. Adani Gas, Green, Transmission, these are the big movers in the trading session. Pashupati, do you track these names closely? And from the Adani house, is there any name that you would like to recommend as a buy?
No, I think Adani House is basically trades in its own sort of avatar, if you want to call it, and it's only the people that are sort of really close to it are fine. There's no question that with Modi ji looking like he's going to come easily in 24, that's good for the Adani Group, which is why we've seen this massive move in all their stocks this week. Plus, there seems to be some vote of confidence from some overseas parties, which has helped them get some loans in a couple of their companies, and also some obviously equity infusions. So I think that I personally have not really followed. I have been in and out of a couple of stocks with a little bit of profit, but obviously I should have held out for longer, because in the last 3 days, Adani Group stocks have really been the winners in this market.
Yeah, that's the FOMO that a lot of people are actually having. Pashupati, you're not alone in that. The massive rally in the Adani Group of stocks in the last 4 to 5 trading session has been nothing short of phenomenal, of course. It's the IT sector which is also holding up. You have L&T Tech, which is higher by 3.5%. Wipro is actually perking up by 3.5%. LTI Mindtree is up. Our technical experts have already given the top bets from the sector. So let me ask you, Pashupati, what's your view on IT? Is it one of the undervalued sector which is coming back into the flavor?
Well, I actually feel that I'm not as excited about IT as most other people, because I think that there are going to be changes in the sense that some of the jobs are going to be replaced with AI. The question is whether our IT is able to actually pivot and take advantage of that. I think in some cases they will take some advantage, which is why it's not going to fall off a cliff. But I do think that the business models are becoming more difficult, and a lot of jobs are going back to the countries where where the work is getting done, just as a way of protectionism, which seems to be happening all over the world. Taking a step back, you mentioned about the Adani stocks. I wish I didn't have a V in my name. I'd just be Adani. Then I'd be probably in the same, maybe I'd be chasing the 68 billion that Gautam Bhai has.
If wishes were horses, yeah, sure. But Pashupati, just wanted to understand whether you're scaling back on your mid and small cap exposure, because many people are getting a little tentative about, what to do with mid and small caps now.
So, I think what's happened is that there's been this huge gap up in the market over the last 3-4 days. I mean, it's, like 800-900 points on the Nifty and, 2,500 to 3,000 on the Sensex. So these have been huge moves. So I think people are waiting for a little bit of a retracement because, all the technical guys look at the charts and say, this is a gap that's been produced. It has to get filled. So I guess it may take a little bit of time to happen, but I think that, there should be some filling. Again, one should be looking at sectors to buy. I'm still very comfortable with infrastructure, cement, steel, a little bit of pharma, because pharma also seems to be doing well. And I'm not so wild about IT. And I've missed the banking sector totally. I am actually not so great about banks, but they seem to have jumped up a lot.
In the banking sector as well. But since you're talking about infrastructure, seems like that the government push is only going to increase. There was a supplementary grant that was made in the parliament today, and my colleague Prakash should be joining us with that latest on that story as to what really happened in the parliament. What were the latest asks and grants that were issued in the parliament today, Prakash?
Yes, an important development coming in as government has tabled first batch of supplementary demand for grant for the financial year 2023-24 in Parliament. A very significant development coming in as government seeks Parliament nod for additional spending of rupees 1.29 lakh crore during current financial year. When it comes to net cash outflow, that would be around rupees 58,378 crore during current year. In addition to that, when it comes to fertilizer subsidy, government has made a request for additional allocation of rupees 13,351 crore additional allocation for fertilizer subsidy. Along with that, rupees 14,500 crore would be granted for rural development. And when it comes to additional allocation for petroleum sector, that would be around rupees 9,196 crore, out of which rupees 1,289 crore would be allocated for LPG subsidy, additional LPG subsidy, and rupees around 8,500 crore would be granted for free LPG connection. So it's an important development coming in. The government has tabled first batch of supplementary demand for grant for the financial year 2023-24.
Okay, thanks very much for highlighting that bit of news. But Pashupati, I guess, what one is seeing play out for the last 2 months at least is the comeback of the chemical names. Irrespective of those warnings which were handed out by large global chemical players, one is seeing a bit of a turnaround play out, both of the story on ground. And of course, that's reflecting on the stock prices as well. Do you think this is a good contra bet?
Well, the chemical industry has always been dependent on what's actually been coming out of China. And I think that one has to be a little bit wary of the chemicals because China is capable of producing anything that we produce at a cheaper price. They just haven't been doing it, and they haven't been exporting as vociferously as they've done in the past. And therefore, our chemical suppliers have been able to take advantage and raise price, and global prices have gone up. So that's been good for them. So I'd be a little bit, wary of being, jumping into those names. Again, going back to what the government has stated that they're going to do, they are planning to spend on infrastructure. There are two parts of it. One, it generates jobs, it drives the economy, and also it's going to finish the roads so that, whatever's left, so that everything is shining before May 24 when the general elections come. And therefore, I think it's all speed in those sectors. So, again, infra, cement, steel, those are the sectors that are to be in the old line traditional sectors. And I would be a little bit wary about specialty chemicals unless it's to do with construction chemicals and it's an import substitute. Aisha?
Sure, Point taken. So industrials as well as infrastructure, L&T, these are the stocks that you're watching out for, Pashupati. But what about Paytm and Honasa? They are having divergent moves today. So Honasa is higher by almost 5%, a bit of a recovery. But then there was this news on Paytm wherein they have temporarily halted postpaid operations, especially the buy now, pay later services, as lending partners have become a bit more cautious. What's your view in both of these on both of these counters, Honasa and Paytm, Pashupati?
Well, the thing is that they have business models that are sticky. Obviously, they've been just lending sort of against civil reports, which tend to be a little bit slower than the actual ground reality. So yes, they are going to be slightly tighter for funds, and Paytm does have the problem of having some foreign ownership, which will actually stop the lenders from giving it to them. But the fundamental marketplace of Paytm, according to me, is strong and there. I would love to see it come down a little bit more. I was in and out of the stock in the 700s. Maybe I'll get a chance to come again. It's close to 800. In a much higher market. So I'm actually looking at maybe taking a bite again into that stock.
Right, okay. Just marking some of the other movers in trade. Look at IRCTC. That's really seeing a breakout. About a 4% uptick is what you're seeing on the stock right now. 745 is where that stock is. There's India Mart, which has actually made a move after, I don't know, a long hiatus perhaps, 3.6% higher, at least in the top 5 liquid movers list. There's HAL, of course, which is sitting with a 6.25% move, and Jumble Fertilizers, like we just flagged off, that also is higher by about 7%. Tata Power too, a meaningful move there, 4.5% is the uptick there. Pashupati, the other debate in the market is also whether the power rally has run its course or not, and whether you now need to sort of at least move allocation to the underperformers or lags within the sector for the past year. Case in point being Tata Power.
Well, Tata Power has been an old favorite and old holding of mine, so I'm very comfortable still keeping it. I think the government power companies, when you put against Tata Power, it's not a fair chance, because I think the government has a hidden agenda of trying to divest some stock before March. Since the IPO market is also very vibrant, they want to probably try and sell some stocks, and therefore you're seeing things like HAL and all also moving, because they may do some divestment there as well. So it's a combo. I mean, I would say go into good quality PSUs that are not paying such high dividends. Go into dividend paying PSUs because they're going to pay fat dividends. So I think all that, because money is needed by the government, so they're going to make sure that it declares. So these companies will get earnings and then pay out to the government, and obviously that means that buy into the OMCs as well. Those are my theories.
Okay, buy into OMC. That's been a theory where a lot of people have also been recommending. But the other space which is coming under pressure today is the sugar stocks. Take a look at Uttam Sugar, down about 11%. Awadh Sugar, down 10%. Balrampur Chini, cut off 7%. Triveni, slipping by 6%. Bajaj Hindustan, down about 6%. And the list is really long. Naresh, is there any sense in, buying these dips on the sugar companies?
So I would wait and watch, because there's been some announcement related to the sector which has led to the dip. So, and they've already rallied quite a lot over the last few months. So would wait out some more time, maybe another day or two. If it corrects another 5-10%, then maybe some of the names could be interesting. So overall, as of now, it's just the first day of selling. Would wait for a couple of days and then look out. Longer term structures are still positive, but a lot of these stocks had gone up 20 to 40% over the last few months. So I would wait out for a couple of days and then maybe have a fresh look.
Okay, point taken. So that's the view coming in on the sugar sector. But what's the view on the market right now? We actually spoke with Gautam Shah earlier in the day to get a sense as to where the Nifty and a lot of these sectors are headed and which are the spaces which are looking interesting right now. Listen in to what Gautam Shah of Goldilocks had to tell us, because this is of course the question whether we'll hit that 25,000 mark ahead of the general election or not. Let's listen into his view.
I think if you look at fertilizer, it's a space that we have liked in the recent past, and I think there are some big stocks which have coming out of long bases. So whether it's a Chambal Fertilizer, GNFC, GSFC, Deepak Fertilizer, I think this is an entire space that we like. We are also a big bull on sugar. I think we've recommended a few stocks there. Awadh Sugar, Balrampur Chini, I think has great potential from these levels. Dalmia Bharat. I think all of these stocks have potential. Not to forget power. I think JSW Energies of the world, Tata Power, CESC, look at the move that stock has seen after years. And I think that's happening in many, many pockets in the market. Infrastructure obviously is a great story as well. And among the large caps, I think IT and pharma, for me, from a risk reward perspective, offer a lot of value. I think pharma could be in outperformance mode for the next 6 months. All the top stocks, I think, can deliver anywhere between 15 to 20%. And IT, I think, if you want a little bit of stability to your portfolio in the madness, in the craziness that's there in the market right now, I think IT, top quality IT, offers great value as well.
Okay, Gautam Shah believes that IT also could have some value. Pashupati, barring the one-odd movers that we've seen in a persistent or a KPIT for the year gone by, do you see merit in looking at IT services, the big boys?
Well, as I said, I'm not particularly wild about it because I think the business model is changing. And let's see how they all react to it. There are obviously going to be some winners in the Indian IT space, those who are able to move faster or move sort of closer to sort of connecting with the customer. But, given that it's slow to get visas to the US, AI is coming. AI is going to basically be US-centric product driven. Most of these guys get their significant revenues out of the United States and parts of Northern Europe. So I think it's should I say, changing times for them. And let's see how they all turn out. The only good thing is that the rupee's been getting weaker, so that's good for their existing businesses. But and I guess will continue to go weaker as oil continues to be as high as it is. But let's see what happens in IT. I'm not as bullish as Gautam Shah on it.
Okay, not as bullish on IT as perhaps what Gautam is suggesting, but I think he's talking purely on the risk-reward basis given the underperformance. But let's also go across to my colleague Sharad. Sharad, yesterday we were talking about the paper stocks and they definitely were doing quite well in the trading session. But what are you, hearing the chatter to be like in the dealing rooms today?
In focus, we'll be having Shyam Metallics, and what we're hearing from the dealers is there's the buying coming in from domestic institutions. Even the volumes have picked up almost 10 times its 20-day average. But do remember the stock has hit its all-time high levels as well. The key DIs already invested in the company. They include the names such as Kotak Mutual Fund and Tata AIA Insurance. But importantly, do remember that promoters have 82% stake in the company, and over the next 8 to 10 months they're expected to dilute, and the buzz in the street is that there might be a block happening where the promoters might be selling a certain part of the stake. So that is the buzz which we have actually already pointed out earlier last month in our dealer segment as well, and now it's fresh as well in the street buzz.
Apart from Shyam Metallics, a lot of other metal names are also actually doing quite well. Sharad, thank you so much for that. You have Vedanta, which was doing okay. You, of course, had Nalco, which was higher in the trading session. And a couple of other names like SAIL, etc. is also getting attention. Kunal, what's your view? Are there better opportunities in the market, or even some of these names could offer good reward?
Yeah, SAIL is interesting. That's a stock which has confirmed a breakout, I think, of 100 mark after quite some time. That's a stock which has been a huge underperformer for the metal pack. So I think that could make a very strong comeback. In fact, the last 5-7 points for SAIL from 93 rupees to 100 odd, I think has been on the back of some decent volumes. Tata Steel is also getting towards a breakout. 130.32 has been a minor hurdle for the stock. It's taking a pause over here, but the more the number of attempts the stock makes eventually leads into the stock breaking out of those resistances. So I think we'll need to wait out for a confirmation point when Tata Steel crosses about that 132.5 odd levels on closing basis to confirm a breakout for itself. Hindalco as well as JSW Steel, these are the other two names which are also looking attractive. So Hindalco, I think the stock closer to 525 mark is already confirming a closing based breakout on the daily as well as on the weekly charts. JSW Steel had a bit of a rough patch in the last 2 odd months. From I think 850 odd levels, the stock had corrected towards 730, 750 mark. But now I think it's managing to come back towards the initial point of the corrective phase. So which means that even this stock is getting into a strong recovery. So bullish on metal names, would prefer the likes of SAIL as well as Tata Steel from a current level perspective.
Some of the other buzzers in trade, of course, are IRCTC, like I earlier flagged off. That stock is holding up 4%. There's India Mart as well, which has jumped up about 3.6%. Naresh, let's take a look at these charts. IRCTC, India Mart, both.
So IRCTC is a promising chart for the fact that it is getting close to a 12 to 18-month high. So the last time the stock topped out around was 750 odd levels back in end of 2022. And we are getting close to those levels today. So if this sees a follow-up move tomorrow, that would be a good breakout of 12 to 18 months. So it's still a buy at current levels and add more if it sustains and closes above 750. India Mart similarly has been pretty sideways on a drift for quite some time. So it's corrected from 2300 to 2600 odd levels. So it looks like a one-day move as of now. So would wait out as of now. It looks just like a one-day move. So IRCTC looks more promising.
Let's put the spotlight on some of the defense names as well. HAL is higher by 7%. Mazgaon Dock is also trending higher. You have Bharat Electronics, then Cochin Shipyard, Mazgaon Dock. All of these stocks are firing away. Pashupati, what's the view on defense? If you have, let's say, a 12-month horizon, is this the space to be in?
Well, I think that a lot of the defense are going to actually probably do FPOs or sell some stock in the market. So obviously they're trading at higher levels, and with good reason, because obviously the defense spending is part of the infrastructure. It's creating jobs, and the government is definitely putting more emphasis on spending money in that sector. So all good, and particularly if you're a PSU defense company, why not?
And that's pretty much the story which is playing out across, I guess, the power names as well and railways too. Today, of course, you're seeing that churn take place. IRCTC, like Naresh was just flagging out, has really gone nowhere in the last 1 year, and that's making a comeback, finally coming in to its yearly top of about 750 thereabouts. Let's see where it goes from here. Today, of course, the story is much around IT, Wipro, LTIM, TCS, Infosys, that's where the gains are concentrated. Of course, there's L&T, Reliance also, which are closing in the green, as is the case with ITC2, which is holding up 2.6%. Pashupati, what's going to happen to some of these FMCG plays with all the concerns around a rural recovery still at bay? What's the take on FMCG?
Well, the answer is everything can't go up at the same time. So, we've obviously got some stuff that has got to either not perform or underperform. We've seen a bit in sugar. FMCG is taking a breather. There's no question that the demographic of the country is moving towards, packaged goods that are branded. So, I think in time, it's definitely a solid part of everyone's portfolio, anyone who comes into India or anyone who's in India. So there's no reason to panic. That's for sure.
No reason to panic, but there's a reason to take some BTSC trades from our charters. So, Naresh, what's the BTSC idea?
So first is the buy on LTI, Mindtree, good momentum in IT space. Stop loss at 55.80, target price of 5,700. Second is a buy on Glenmark Pharma, which has given a short-term breakout, a stop loss at 793 and a target price of 820.
What about your top recommendations?
So I'll go with Tata Motors as a buy, targets of 750, stop loss at 675. And Som Distilleries is another name which is confirming a breakout, targets of 322, stop loss at 299.
Okay, closing in with a 100-point near-about gain. Pashupati, will let you go on that note. Kunal and Naresh, thanks for joining in as well. 21,000 at least in the Nifty futures. That's where we're shutting shop the day. About 70 odd points short on that mark. On the Nifty futures. The breadth of the market has managed to hold out. Of course, we've had better days, but 110 to 78 is the kind of margin that we've closed the day with. You had some of the Adani names which did close in the red, so Adani Enterprises, for instance, but again, it's a meaningful move that the stock has seen in the last 2 trading sessions, so maybe some profit taking there. ICICI Bank, Axis, IndusInd Bank as well have been pegged back, as has been the case with Eicher as well as Maruti. Technology, of course, has held out today. ITC Nestle did well, Reliance held out 1.25%, Adani Ports held out, Bajaj Finance, Britannia and M&M have been the movers. From within the broader end, of course, it's been HAL, Tata Power, IRCTC and Jumble Fertilizers which were topping the charts. But that's pretty much it on this edition of Closing Trades. Thanks for watching.